Now we're ready to move into the plenary session. Where does India fit within the global investment landscape? Quantifying the opportunities and assessing the risks. I'd like to introduce the moderator, Diane Farrell, Acting President, U.S.-India Business Council, and former Board of Directors, Export-Import Bank of the United States.
Good morning. We got to get some audience participation. Good morning. Good morning. Okay, that was really anemic, and I know you've had your coffee by now. Good morning. Okay, a little better. By the end of this discussion, I think you're going to have even more energy. We are very fortunate this morning to be talking about, at this late stage in the conference, how India really fits in when we're talking about global markets, and most especially comparing India as it's an emerging market. And as President Obama was fond of saying, India is not an emerging market, India has emerged. We have three experts here who will comment on what they see in the context of a change of government and the kinds of policies that have been initiated or at least suggested, including the Prime Minister's speech this morning our time about manufacturing, but also how they see the long-term play, having watched India, having experienced India for so many years, and having a perspective and a context. So I would like to start by welcoming our panelists. To my far left is Oliver Fratcher, who is the CEO of EM Leaders. I have Adi Divji, who is the head of alternate investments for Catalina Holdings, Quanta US Holdings as well. And then Sarjeev Sidhu, who is the global head of emerging markets debt for Aegon Asset Management. I'm going to just throw out a small factoid to give a context, as I mentioned, to what this panel is to be about. And as we think about the Prime Minister, about potential changes in India, and as we hear the opening comments from our panelists first, and then we will go to some questions, and we want to involve the audience in those questions as well. Recently, there have been delegations here in the United States who have been promoting Vibrant Gujarat. I'm sure everybody here is familiar with this conclave that was created by then Chief Minister Modi to highlight the state of Gujarat and to encourage investment. And it was a very, very successful, and continues to be very successful for the state, as evidenced by the fact that the Prime Minister, when he was Chief Minister, was able to attract FDI, including companies like Ford Motor Company, Mead Westvaco, Abbott, and others. And in fact, this Vibrant Gujarat promises to be bigger and better because the Prime Minister is trying to, he will be very involved again, and he's also trying to shine a light on the rest of India by bringing his cabinet with him, et cetera. So as part of the discussion that we were having at that event, where we were hosting him with our member companies, the ambassador actually said that, you know, India chafes at the World Bank rating, which has India 134 out of 189 in terms of ease of doing business. And when you speak with officials, they will explain that the metrics are somehow skewed because they're not looking at the right markets within India, et cetera. Not here to debate that. What's really interesting is that Gujarat has determined that if you just looked at ease of doing business in Gujarat, that state, were it ranked on this global metric, would actually be 76 points higher than where India is right now. 76 points higher than 134 out of 189. So the reason I bring this up is that part of the excitement and the enthusiasm about the potential for change in India right now is a Prime Minister who has the very practical ability and proven track record to be able to address the big problems, including most notably infrastructure, which has been an enormous impediment to seeing further FDI, seeing manufacturing flourish, basic economic necessities that India has to have by all economic accounts in order to ensure it's the kind of ambitious growth that the Prime Minister has promised as candidate Modi and is now attempting to effectuate as the Prime Minister. So that's the backdrop that I think we're going to be discussing here within the context of how India still is faring versus other emerging market opportunities, since this is the specialty of these gentlemen. So Oliver, would you like to start? Give us a few of your preliminary thoughts, be very candid, and then we'll continue on.
Pleasure. Thank you, Diane. Let me start with a few observations that we at the IMF made when I was on the India team about 20 years ago, after the 91-92 crisis happened. A new Singh government just came in, lots of optimism again for reform and change. And now at the end of the Singh government in 2014, the same IMF annual update coming out with the same themes. So 3 quotes. First quote, 1994. The overall fiscal deficit needs to be reduced substantially to relieve pressure on domestic savings. 2014. Further fiscal consolidation is needed. Tax and subsidy reforms will be required. Same topic. Second comment. Inadequate infrastructure remains a major barrier. Obstacles constrain stronger and broader investment. 1994. 2014. India's growth slowdown is unusual. Stalled infrastructure and corporate investment ought to be improved. And we need improvement in the environment for capital inflows. Third comment, 1994. Serious distortions are in public enterprises, labor markets, and the agricultural sector. Inefficient use of India's capital and labor force. 20 years forward, addressing supply bottlenecks and structural challenges, agriculture, power, public enterprises will be essential to achieve faster growth. So unfortunately, the same 3 themes are still very present in India, much more so than they are in China, for instance. And I do hope at the end of the current administration, we will not have the same 3 themes to revisit again. That's the first observation on India, a lot of optimism. I believe investments in India also ought to be viewed in a more positive, active investment structure. I followed the panel this morning and heard about a number of ways of investing in India, be it passively with ETFs, through global fund vehicles, or through local managers. I'm happy to talk about the advantages of local managers investing in India with very promising institutions.
Thank you. So we'll return to the local partnership concept, but if I were going to summarize your comments, it would be the more things change, the more they stay the same.
So far, we have seen that.
All righty. Thank you. Adi?
Thanks, Diane. Firstly, I'd like to thank Diane as well as institutional investor for the opportunity to speak with such an esteemed set of panelists, as well as to the audience today. Briefly on Catalina, a $3 billion reinsurance firm. We consolidate non-life runoff portfolios or companies. As head of alternative investments at Catalina, I'm primarily responsible for less liquid, private-oriented market investments, primarily in developed markets because that's where we have liabilities, but also potentially on an opportunistic basis, extremely opportunistic in emerging markets, primarily because of the volatility surrounding public market assets there. So on a professional level, I look at India within a broader emerging markets framework, how it compares on a relative value basis. But personally, I'm quite the bull. I have in Gurgaon residential housing investments on a pre-construction basis in 2 specific areas. Oliver mentioned a quite notable statistic to me. About 7% only of the populace in India has a mortgage. And I think the housing market overall has tremendous room for growth. I'm looking at, just to bite off Oliver's information here, with India's 8% fiscal deficit and only 30% savings rate, I think with the new government in place, the drivers are there to change things around from a macro level. But also, as Diane mentioned, about Gujarat and how it compares relatively to India, we also need to keep in mind that Modi did a fantastic job in Gujarat, and I'm optimistic about his ability to execute many of the similar mandates for the country. But we must be mindful that Gujarat is part of India and not representative of India overall. And I think Modi seeing that now manifest itself in the first round of announced proposed reforms. I don't believe they were as comprehensive as they should have been. But again, I remain hopeful about the country going forward.
Excellent, thank you. And again, we're hearing the theme of this time it really could be different.
Hopeful.
Well, thank you, Diane, and thank you to Institutional Investor for inviting me. I represent Aegon Asset Management. We are a global financial services company, and I run their emerging markets fixed income portfolio, which invests in over 65 countries. So I kind of get a chance to look at emerging markets on a very global, on a global canvas. I think in order to understand where the opportunities are as far as India is concerned and how to assess the risk, one has to take a little step back and look at what are the key things that we are observing globally. And there are about 5 themes that are occurring. The first one is that there's certainly a rise in geopolitical risk. I mean, there doesn't a day go by when you're either reading about Russia, Ukraine, or the South China Sea, or you're looking at what's happening in the Middle East, in Iraq and Syria. And I think that has implications for confidence when it comes to investors. Second is that after the '08 crisis in the US and then the 2011, when we had the European debt crisis, that triggered what I would call a loss of exchange rate competitiveness of emerging market currencies. And I think that has continued, and I think it'll take a little bit of while for currencies to retain back exchange rate competitiveness. And I think that's important because emerging markets are traditionally exporters of goods and services. And so I think that's the second. The third is, the unknown in China. The amount of leverage that's built up in China has implications. If there is a correction in China of global implication, we are starting to see that in the commodity markets, and we'll probably see that also in the financial services market, given the amount of borrowing that has happened by Chinese entities. The fourth key driver we are observing is the growth. Global growth has been slowing down. There was a time when emerging markets would grow at a differential of about 4% to developed markets, or at about 3 times developed markets. That has not happened for the last 4 or 5 years. And I think that also has implications for not only emerging markets, but also for India. And finally, I think there's another key driver is that there's been a reversal of globalization. You've seen India stand at the WTO, but also the sanction regimes that are being put in place by the US and some of the European countries. There seems to be a pattern of a reversal of globalization. Again, that has implications for global growth and for India as well. We know that as the story. We know those factors. The question is, where are we going? Because in order to assess opportunities as well as the risks, one has to know. And I think the way we characterize the path that the world is taking, but also India is taking, is that we are going from a certainty into a more uncertain world. And there are 5 key things that we are observing. Number one, the US is moving from an unconventional monetary policy to a more normalized monetary policy. And that has significant implications for India and also emerging markets. The second is European banking system is going to go through a structural change, and that has implications for capital and growth and ECB policies. The third thing that we are observing is that Japan is undertaking an experiment that I think is never seen, which is trying to move from deflation to inflation. And even we are observing that in the currency markets, but again, it has implications for emerging countries. The fourth thing, obviously, is China's story, or the path of moving from rural to urbanization, and that also has implications for slowdown in China that is impacting. And finally, and this is, I think, more relevant to not only India, but also many key emerging markets, is how does India find a sustainable growth model post the '08 crisis? And in that front, I think India is a little bit more ahead because India is largely a domestic economy. It's primarily a services economy, and also there's an agriculture sector and a manufacturing sector that's picking up. So India, in some ways, can shield itself away from some of the things that we're observing in the rest of the world.
Well said. And it's a
Sorry for the long
no,
answer.
no, it's a thoughtful articulation of the kinds of exogenous shocks that can occur that can become catalysts for change. So, and then the question is, though, how you all evaluate the risks and then make your decisions. So going back to present day, current market capitalization in India is now 1.5 trillion. It's actually surpassing Australia and South Korea at the moment. You can't pick up a financial paper, and not hear about the basic general exuberance that markets are showing toward India post the election and with the announcement of some of these reforms, most of which yet have not taken shape because this government's only been in power for 100+ days at this moment. But do you feel that, you know, investors are now taking an overly optimistic view, given your deep knowledge of India and also, you know, as you're advising investors relating to global and emerging markets? Is there going to be a correction at some point? Is there going to be some sort of a market reaction expressing disappointment because change hasn't come as rapidly as we all impatiently expect? And I'll go, you know what, let's start with Adi on that one.
I think it's a bit of both, a mixture of euphoria and skepticism, in the sense that, yes, I think, you know, the Sensex is at or close to all-time highs. Mr. Sidhu can correct me on that, but I think as a result, from a broad index level, some correction will occur. But I do believe there are certain sectors in the market, in particular housing, on an individual level, but also through the development of the REIT market and other more index-oriented housing products, which are, I think, potential catalysts for growth. You know, as I mentioned, less than 10% of the market has a mortgage. Modi has already announced his intent to try to change the ease of getting a mortgage. He's, again, finding that among many goals difficult to pass at the national level. But still, I think, you know, there's reason to be optimistic in particular sectors. But I do believe, you know, corrections are, you know, inevitable when you're always overcoming the previous peak, I think, from a broad level.
Fair point. Sarjeev, anything you want to add to that?
You know, one of the things that we always observe is that emerging markets, you know, political cycles tend to drive business cycles, which then in turn drive valuation. So, you know, this year has been a very political heavy calendar year for emerging markets, and India's, you know, no exception to that. The good news is that India's election is over. We have a government in place. Obviously, there are some political challenges for the Modi government, given that they don't control the upper house or the Rajya Sabha. And I think that we'll probably have to wait for another couple of years if they manage to get control of that. So I think from that perspective, I think the markets are certainly betting that the reform agenda and the trend is going to play out in its favor. Now, you know, the thing that happens with markets is that there's, you know, India is no exception to that. You see it in China and you see it in other places. You know, we are settling in a global world of financial repression, and which means that money is going to go and find itself and maybe perhaps create bubbles, whether it's in the real estate market or whether it's in the equity markets. And, you know, we see it here in the US. We're probably seeing real estate in China. And I wouldn't be surprised, you know, that, you know, a couple of years down the road when we look back, that perhaps maybe the equity market in India is a bubble as well. But this is what happens when you have financial repression taking place. And some of it, I think, has been, the catalyst has been the quantitative easing in the US and now followed into China, Japan, as well as in Europe.
Oliver, thoughts?
Interesting. I have prepared a few numbers for you all on the Indian equity markets. Maybe one slide I will share with you.
Oh, good.
If that's all right. Just go one page forward. Here we are. We certainly had a great year in Indian equity markets. I think one of the best performing markets for the year, up 40% the last 12 months. If you take a 10-year horizon, India is up 15% annualized returns in dollars, compared to 12% for emerging markets. So certainly much better than China has done over that period. It was not small cap and growth over the 10 years. In fact, they underperformed by 150 basis points. Only over the last recent years, they did very well. India is also a quite volatile market, 26% standard deviation, much higher than the average 18% in the index. On the currency side, we've seen over the last 5 years a 20% depreciation of the rupee. But of course, mind you, inflation is still quite high at 6, 7, 8%. So in real terms, the currency is more or less stable over the last 5 years. And I should also say, in terms of sectors, the depreciation has helped those good foreign currency earners, IT and pharma industry, and has hurt the consumer and energy sectors, obviously. In terms of valuations today, India and the Philippines are the most expensive markets in Asia and more broadly across emerging markets. We've got the Sensex at 27,000 right now, PE current, not forward, current, above 19, so outside of the range 16 to 19 band. And the Nifty PE right now at 21, getting into a very exuberant zone, I should say. One can't time that very carefully, but certainly Indian markets are very expensive. Expectations are very high. So there is room both for disappointment on the domestic side and for shocks from the foreign side, if indeed interest rates were to rise on a global level. In terms of investments in India, just very briefly, we've heard different avenues of investing into Indian equity markets, a very large market in index investments. I should say the MSCI India index is a very different index from the local Sensex or BSE 500 indices. The MSCI India has 70% large cap stocks, 22% IT, and the local indices, for instance, BSE 500 has 75% mid and small cap stocks and only half of that in IT, so quite a different index. And if you were to invest in these index-related ETFs, obviously your performance would have been good over the last 10 years. You would have been at the benchmark minus 80 basis points for the ETF. If you had invested in more actively managed global emerging market equity funds, you look at Lipper statistics, for instance, 1 in 3 of the global emerging markets funds investing in India would have outperformed the benchmark. 2 in 3 would have underperformed. The median manager would have been 200 basis points below the benchmark, just about the fee level they would charge. If you pick the top manager, the #1 global emerging market fund investing in India over the past 5 years, you would have made 5% in addition to the benchmark, a good performance. If you were lucky and picked that top performing fund, it's about $1 billion fund in the US. If you had gone, for instance, with 2 local managers who have been in this room this morning, 2 large firms doing a large cap or a mid cap Indian equity fund, mutual fund, you would have added 12% to the benchmark over the past 5 years. So quite a different performance from a smart benchmark, very deep research, market asymmetries being present in India, a very good bottom-up stock selection skill, adding to alpha. So that's really an example of how investors can reap benefits by going with the best leading local managers in India and emerging markets more broadly.
That's a very compelling difference, local versus the
Global.
kind of distance ETFs that are done. So looking at, taking the macro picture, you've identified some of the markets, but are there right now, in your view, sectors that are undervalued in India? You know, I'll stick with you, Oliver, then I really want to ask Hadi about his real estate investment, because anybody that has done that successfully is just brilliant, I will say, simply because there are so many impediments to succeeding in that area when you're talking about land acquisition, permitting, and everything else, even in Gurgaon. But do you want to talk a little bit about sectors that you think right now are overlooked?
I would take more a 5-year perspective and take maybe a secular theme on India if I could, rather than being very short-term, because everything is expensive right now.
Yeah.
But looking forward 5 years, I think we all have the same view on the panel, that the financial sector in India has traditionally been very bank-oriented, directed lending-oriented, and only 2% of household wealth is in equity markets, only 7% in mortgages, which is much below the Asian average or the emerging markets average. So growth for financial services is certainly enormous. So financial services, be it in real estate, be it in mortgages, be it in brokerage, asset management locally, certainly very promising. I think the second theme I wanted to come to is urbanization. In India, urbanization is only 32% of the population right now living in cities. That's where China was 20 or 30 years ago. It hasn't really moved over the last decade. It could move to 50 or 60%, 10 or 20 years out under the new plan with 100 modern cities in India. And that means infrastructure, that means housing, that means health, that means a lot of services come along with that. And the third theme we heard yesterday in a panel about energy. I think coal is a very troublesome main provider for energy in India, and the renewables are really catching up fast, both solar and wind. And I see a lot of potential in the energy sector in India going forward. These three themes, I think, energy, urbanization, construction, housing, and services, as well as financial services, are the three themes and sectors I would be most promising in India.
Excellent. We will clearly be watching. Okay, let's talk a little bit about real estate, but in the broader context, as you're looking at sectors. Obviously, you have a belief in the real estate sector. That's certainly logical on the basis of some of the statistics that Oliver just cited, for example. The barriers to entry are very steep for that, and somehow you've navigated that, so you really are to be commended. But talk a little bit about that, and then any of the other sectors that you think are up and coming. And I agree, it's more the 5-year view than I think the near term.
Sure. So to answer your question regarding sector, I think it's pretty clear now which sector I'm optimistic about, housing and consumer financial services, as Oliver mentioned. But in particular, I just wanted to separate here. I wear two hats effectively.
Of course.
I have an investment vehicle, personal investment vehicle, in which has made those real estate investments, which are brownfield, by the way. They're not land acquisition.
Oh, okay.
It's
That helps.
partnering with an existing developer and acquiring the property pre-construction after that developer receives the permits, because like most things in India, it's very political, the real estate game. So.
And you wouldn't consider going in unless you're at that stage then, where all those clearances are taken
currently at this
care
time,
of?
I don't want to take
Okay.
the greenfield risk on
Right.
top of the
Right.
development risk that I'm
Right,
already
right.
taking.
Okay, makes sense.
So, and it was very purposeful. Gurgaon was close to Delhi, and the idea was to benefit from the urbanization that Oliver mentioned, but more on a periphery rather than within Delhi, where I feel the opportunity is over because land prices and housing there is already quite expensive relative to just the outskirts nearby. So, post Modi, and especially because of the overwhelming nature of his victory, my investments have appreciated in value. Now the question is, will I actually realize that value? Is to be seen. But the idea is there because it's a personal investment. I don't necessarily have to report to an investment committee. I am the investment committee personally. Exactly. The challenge is at the institutional level, where I have among my investment committee 2 Canadian pensions and Apollo as my shareholders. It's a bit different. It's a bit more formalized, more conservative. And in the end, we are an insurance company, although we have a somewhat flexible mandate on the alternative side. And so even development risk in developed markets is an issue for them. So I doubt that they would adopt my personal approach towards an emerging market, India or anywhere else for that matter. So I just wanted to differentiate there. So personally, I'm very optimistic. I do think at the institutional level, I'm going to look at it more on the public market side for now, because they're willing to take a lower return versus private market in exchange for having just a slightly greater degree of liquidity and adopt a more diversified approach, which you can get through public markets that you can't necessarily get through privates.
Right.
So hopefully I've answered your question in some way.
No, that's very helpful. Sarjeev, your thoughts?
Well, on the, I'm not involved in direct equity investments in India. It's primarily in the external debt markets for Indian companies that are issuing in the external debt markets. So on that front, it's primarily been financial services companies like banks who issue in a dollar-denominated space, and either mostly from their subsidiaries out of London or elsewhere. And India is a BBB- rated country, which was on the verge of being downgraded to below investment grade. Luckily, they've bought some time, and I think that time is predicated on structural reforms that the rating agencies would like to see. So this is certainly on the cliff from the standpoint that risk premiums in India are, they're compared to all the BBB- rated sovereigns that are out there or corporates. And India really doesn't figure much in the global bond indices because there's no external debt from the sovereign perspective, but on the corporate side, obviously, there are. But I run a China equity fund, and for some of the things that we've observed there, and I think are very applicable to India, that China's gone through a process of harvesting its demographic dividend, and there's been a sharp contrast between the new economy and the old economy. So as technology and e-commerce and the urbanization has taken place, there are companies and sectors that have really benefited from that. And I think the same applies to India as well, as you see more than just the 4 or 5 states that we always talk about, whether it's Gujarat or Punjab or Maharashtra, Tamil Nadu, maybe throw in another state. Beyond that, when you look at the country, there's a number of other states that are in different stages of their development and path. And so, yes, I think as India harvests its demographic dividend, I think the new economy is likely to benefit. And I think there are sectors such as reform of the state-owned enterprises is another area where I think there'll be potential opportunities. But this is just observing it from the things that we observe in investing in China. So, but no direct investments in China, Indian equities. We have a joint venture in India with Religare, which is doing a lot of our local investments.
It's an interesting observation about state-owned enterprises, because there is a lot of discussion about divestiture. And if you look back to former BJP leadership, there were some efforts in that direction. And yet when you look at Gujarat power sector as an example, more of an interest in reform than divesting. So I think that's going to be something that'll be interesting to watch directionally as the Prime Minister turns his gaze to some of those reforms. Just out of curiosity, folks in the audience, other sectors that you think are overlooked at the moment, but in 5 years' time we're all going to be patting ourselves on the back because we saw it? Anybody? If not, yes, gentlemen, right? I'm sorry, I can't see terribly well, but if you could identify yourself, please. Okay, reaction. So textiles and garments? Cement. Okay. I hope someone's taking notes. I can't wait to compare in a few years' time. So, yes?
Sports is a sector coming up, so entertainment going more into the sports sector.
Absolutely. How about hospitality? Anybody see potential there? I think that's another one. As we're certainly at the U.S.-India Business Council, we are talking to a lot of hotel chains, and they have great interest and enthusiasm and expansion. Again, not to always sing the Prime Minister's praises, but he's actually also been very successful in promoting Gujarat as a tourism destination from within India, within that their own. So growing that native local tourist market is probably going to be a big opportunity, as well as it being a serious job creator on a fairly massive scale, which is another important priority as we talk about the demographic dividend and the need to create jobs and grow a middle class. So thank you for those additionals. Does anybody want to react to textiles?
Well, the one, to me, when you observe Gujarat from a little distance, it is in many ways the experiment that China had in the Pearl River Delta, which is Ganzhou, Guangdong, Shenzhen area. And I think in many ways Gujarat actually is very similar in terms of opening up and really let market forces drive through reforms and pro-market progressive policies. And I think that when it spreads across, obviously, in many ways, India is not a very mobile country. You don't see a lot of people from Bengal moving to Gujarat and Gujaratis moving to Assam. And so in many ways, you're talking about 26 states and union territories that are sort of very much sitting on its own place in the geographic map of India. And so each state is driving its own reform agenda and the political process. So you're right. I think there are sectors which sort of cut across these states, whether you're talking about cement, which is tied to infrastructure, or textiles, which you got to clothe 1.3 or 1.4 billion people, so and the rest of the world. So I think from that perspective, obviously, I agree that, and entertainment, obviously, we are not only just Bollywood, but also sports is becoming certainly very, very popular.
Any other comments? Cement? Entertainment? Oh, we have another, I'm sorry. Oh, excuse me, sir, yes.
Your reaction, and I'm sort of harking back to something I've heard in a panel yesterday, was eye-opening for me, which is that. Thank you. So I was saying I heard this in a panel yesterday, which really got me thinking. One of the panelists said that there has been tremendous penetration of mobile phones and even some basic smartphones, and that a lot of e-commerce is happening almost, I think I remember more than 30% of e-commerce is happening on small devices, really forcing companies that have, and I'll make my point in a minute, or maybe less, that's forcing a lot of companies that have designed their online storefronts on large screens to scramble to make them smaller and fit on phones. Sort of connecting the dots, in India there is, to my knowledge, very little or perhaps no penetration of people using credit cards or debit cards as means of payment, but a lot of people, including people that we don't necessarily think of as big consumers, the common persons, are carrying around smartphones. One more dot I'll throw out and then I'll connect all of them. There's also, at least I'm from India, I grew up there, I've been in New York for 20 years, but I know that there's a cultural a feeling about not using credit, of not borrowing, of sort of using cash, spend what you have. Okay, so now when you connect all these dots, I see that there might be a tremendous opportunity for mobile payments in India, where people who don't have credit cards, don't have debit cards, but who are carrying their phone around all the time, using that to basically spend the money they have in their bank account, but then without, with the ease of not using cash, not carrying around wads of cash. And I remember reading some reports, I can't remember when, but even farmers in rural areas using their smartphones to make payments for commodities and such. To me, that seems like a recipe for someone to step in, connect all these dots, and make a killing in mobile payments. Your reactions, please.
And of course, the announcement of the expansion and introduction of RuPay that was just effectuated a couple of weeks ago, the impact it's had. And you're right. I mean, there are innovations in banking, especially getting to the rural sectors, that look to provide wonderful opportunities. There are still so many regulatory hurdles when it comes to foreign bank interests that it's still been a bit of a standoff for some of our member companies. But your reaction just to the general impact of whether it's electronic payments or just e-commerce generally?
Yeah, if I may, Diane, that's a great point. I actually agree with you. I think there's a tremendous opportunity for growth there. I would actually relate that potential growth with microfinance initiatives. And I would just argue that hopefully the owner of that mobile phone is the woman, not the man. Otherwise, it'll be spent on booze and cigarettes, historically. I think microfinance, to address your rural point, is I wouldn't say exploding, but growing in areas that are underserved. And mobile is a very convenient way for them to avoid having to walk God knows how long to get to the financial center to conduct the transactions. And in fact, what's happening is the providers of those goods and services are actually coming to the village or rural area themselves to provide it because they can get payment instantaneously through mobile. And yes, you're right, the lack of penetration of credit is endemic. That also explains, I think, why it's only 7% for mortgages. I mean, what is a mortgage but housing credit? I think you're absolutely right. I think there have been companies, or there are companies that have some type of initiative to pay through mobile that have worked in other countries, like Africa in particular, that are looking to replicate that in India. But I do think there's a lot of room for more competitors. But as Diane mentioned, the regulatory hurdles are stiff.
Yeah.
And just to add to that, I think one doesn't have to go very far. You can see how explosive mobile banking has taken off in Africa. And I think we can certainly draw lessons from that. And I think there's certainly potential there is. But I think before that happens, I think the the financial sector has to first make inroads into the sectors that you're talking about,
Yeah.
and that comes with, it's not just banking and banking services and financial services, but along with that, got to get electricity and basic waters, and I think the question becomes in terms of priority of the national government and the state governments in terms of what are the kind of services. Then the other aspect of any mobile banking is the architecture of the broadband and the technology. And I think that still is very, very expensive. You can see, India is still at 3G. I think it's going to take a while. Countries that have gone into more promising in terms of financial services on mobile banking are really to the level which we see in the West is on 4G networks. And even in China, which is starting to make a lot of inroads into mobile banking, it doesn't seem to be mobile payment other than just checking your account, checking your balance, making sure that some check payment is going through, and maybe getting deposits. I think it's at a very basic level before it moves to actually conducting business on a device to devices.
Oliver, anything you want to add?
Very good point. I think the World Bank would hire both of you to join their microfinance team. But besides that, I think India should look up to China rather than down to Africa in terms of what's going to happen in the next 5 or 10 years. And just taking the 3 themes we have had, financial services, I think, is one topic where certainly China has come a very long way. Mortgages is a big point. There's first, second, third home mortgages in China available right now. 20 years back, basically no mortgages at all. So a long way we've come in China. Also in terms of insurance and pension sectors, very underdeveloped in India, certain potential to grow that. Second area, infrastructure, urbanization, tourism within India, I think. Just to look at railways in China, 10 years ago, basically very small, slow trains like in India today. Today, bullet trains, 20 next to each other in Shanghai train station, larger than National Airport in Washington in terms of just the infrastructure there. I think India could come a very long way of building domestic infrastructure, not just airports, but also trains and building cities. I think huge potential there going forward. And in the third area, energy, I think China just announced that they're getting out of coal for the main cities, given the pollution that they have experienced. I hope India doesn't make the same mistake. Right now, over half of India's energy comes from very dirty coal, and renewables will really pick up the pace where China has already started out on the solar panels, taking a very large market share. I think India has huge potential, both in wind and solar, going forward. So I hope if India looks up to China, what is possible, a lot of things can be replicated in India.
Just a comment to the e-payments questioner. The other tremendous benefit that will impact the way investors look at India is the more electronic these types of transactions become, the greater the transparency that ensues and the reduction in corruption. And so there's that benefit to it in addition to everything else that's been spoken about here. I'd like to go to another question. I want to take a pivot on, Sarjeev, your thoughts, because taking the external view looking in, and you talked about market shocks. We can talk about volatility in the Middle East and whether or not, and how that's going to impact fuel pricing, for example. And I would say, Oliver, you're 100% correct about renewables. And in fact, the Times a few weeks ago had a comprehensive article about how renewables pricing has dropped at a far faster rate than investors had anticipated. And now suddenly it's becoming a real competitor to the traditional energy sources, including coal, which is creating another problem in terms of keeping the grid maintained and consistent with some of the fluctuations that can result with renewables and how you incentivize. But no one saw that was going to happen as quickly as it is now, just as an illustration. But we talked about, of course, the current account crisis that precipitated reforms in 1991. We can talk about the Asian financial crisis and the benefits, the positive economic benefits and sort of global opening that resulted from both of those. What would you predict of the various shocks that you described? What would you predict? I mean, is it going to be fuel that's going to drive greater economies, conservation efficiencies? What kind of an outside shock would create a 1991 dynamic, and what would that be? Would it be that they they're able to move, push through on infrastructure projects at a more expedited rate. So what would be the sort of scenario that's most realistic if change is going to come from an external driver?
Well, and then this is classic across emerging markets. You need a crisis to sort of change the trajectory of the markets. And certainly, I think the election was a game changer in India, no doubt about it. I think the country as a whole felt that it had reached an inflection point at which it needed a reset and a change in direction. And I think that's what brought Narendra Modi to power and the BJP. But from an external standpoint, the only scenario that I can envision that could impact emerging markets is a combination of rising rates, which we saw in the early 90s in the US, and combine that with leverage in the corporate sector, which we observed in 97 in Asia. When you combine that two, you get a mix of what may potentially be a scenario that could head. When you look at emerging markets, there's been significant amount of borrowing by the corporate sector. Currently the emerging market corporate represents about $1.5 trillion. There's been explosive growth in debt issuance in external debt, in hard currency. And so as interest rates start rising, I think there's going to be a significant amount of pain that is going to be felt by the corporate sector. And that, I think, could potentially cause a repeat of what we saw in the 97 when a lot of this borrowing is not hedged against the US dollar.
I think, Sarjeev was right in many ways. The US rate outlook and changes to the Fed funds will drive rates across the world, including India. But I believe that in addition to managing the external and exogenous factors, India really needs to take a hard look at changing some of its subsidies, existing subsidies. You mentioned fuel.
Right.
Fuel subsidies are a tremendous drag on the deficit.
Yep.
The problem is that those specific subsidies are targeted most to the people who need it the most. And so, you're in a quandary. What do you do to get one of these indigenous drivers to change? So I think therein lies Modi's predicament. He's trying to liberalize markets in India, remove the red tape, privatize these companies, but he also needs to take a look at these massive forms of assistance that are almost endemic within the culture, in addition to these external factors, to really be able to withstand such shocks more effectively.
Right. Thank you.
Yeah,
Oliver?
just a quote from Raghu Rajan, the great governor of RBI. He, I think, once said at the IMF, "Never let a good crisis go to waste."
Right.
And I think India might
the
need
Obama
another
White
good
House
crisis.
would take credit for that, too.
Taking that, but comparing India where it is today to where it was, say, 1991,
Right.
I realize that India still is very vulnerable, both on the external and the fiscal side, so twin deficits being very significant. On the fiscal side, we mentioned subsidies. State-level fiscal deficits also quite large. If you add them all up, it comes to between 7 and 8% of fiscal deficits in China, certainly in the red danger zone. Also, the current account not being very strong, 3 to 4% current account deficit. You add to that foreign investments just into Indian equity markets of $100 billion over the last 4 years. And in comparison to 1994, today Indian equity markets are very rich, are very, very expensive. It's a PE of 19. China has it at 10. Korea has it at 10 or below 10 right now. So it's quite a difference. If things happen on the external side, be it on interest rates rising, or be it in a conflict with Russia or with Iran, affecting energy and oil prices in particular, and mind you, India imports 1/3 of its energy from oil, from externally, very vulnerable to energy prices. So if that vulnerability came through, India today is vulnerable on the twin deficits, and things could actually happen and be forced upon the government in an unpredicted way if there were an external shock. So I think there is some caution warranted on the external side.
Yeah, I'll just add one more thing. I think while yes, India is vulnerable, but I don't see India facing any sort of a balance of payment crisis. And I think having a flexible exchange rate and also having liberalized interest rates, I think the governor is probably going to move very forcefully to raise rates to sort of negate that, the negative consequences of something that's coming from the external side. So.
That makes sense.
Yeah.
We have 19 seconds, but I want to include the audience in this final question, which is a very simple question to ask and a very difficult execution of whatever your answers are going to be. So we're all watching for signs. We just heard the Prime Minister's speech about manufacturing and make in India, et cetera. Our member companies talk about really 4 types of reforms. One would be tax, because that's been a huge problem, especially retrospectivity. Second would be intellectual property rights and concerns that our innovators have. Third would be infrastructure and how important it is to be able to facilitate. And the fourth would be FDI. So insurance FDI tends to be a bellwether that a lot of us talk about. We've been waiting about a decade. We're hoping that it's going to happen in the winter session. We had some hopes it would happen in the monsoon session. But what's the one reform enactment? I would say GST, but I think we all agree that that's probably 2 years down the road. But what's the one thing that could happen, say, in this sort of near term that would be the positive signal that would help you to encourage your investors to look at India in a more favorable light, or with the belief that change is really happening? You look ready to answer that question, Adi.
Privatization, but that doesn't happen without red tape reduction.
Okay, and of course the Prime Minister loves the expression, more red carpet, less red tape. That's been a catchphrase. Oliver?
I would second that. I think reforms in terms of privatization always happened bit by bit, sector by sector in India. And I wish it was continuing, not only on the state level, but on the national level, to have more sectors liberalized. I think financial sector services are certainly ripe for liberalization, of having more foreign capital come into India to facilitate infrastructure investment from within as well. And a lot of domestic savings are there to be utilized, not just foreign savings, but it needs to have financial sector liberalization to have that happen.
Right. Excellent.
I'd say too, insurance, obviously, because we have a 26% interest
Well,
in
yeah.
an insurance company, hoping to get to 49
Who
or
happen to be a
74.
member of the U.S. India Business
Right.
Council in the
And
interest
then
of
the
full
second one
disclosure.
I would say is the retail.
Ah, okay. Multi-brand retail.
Multi-brand retail. I think
Okay.
that would be another sign of
I think we're going to get GST before we get multi-brand retail, but that's just my personal view. Others in the audience, what would be the reform that would really continue to signal this commitment? I see a gentleman midway there. Yes. And if you could give us your name and your company, please.
Hi, my name is Simran.
And then we'll wrap.
I am an investor with IIFL.
A little louder, I'm sorry.
Hi, I actually wanted to get a perspective on the tax evasion issue in India. One of the points raised in the recent G20 summit was also regarding the global synergies coming together to really address the black money issue of India. Like, do the panelists see
That's a real
any
estate question.
tangible policy coming on that front? And if it does, do they see sectors like real estate or other sectors in Indian economy getting solely hit by that? Thank you.
So I think we're going to end on that question. We're going to have one response, and then I know everybody has to move on to the next program.
It's a painful process. There is, being a real estate investor externally, they have a system called the PAN system, which I have to apply for now, which is kind of
You
annoying.
need a PAN card.
Yeah, you need a PAN card. And basically, that card is the government's response to tax evasion. I don't know if it's the complete response, but certainly a step in the right direction, where basically they monitor buys and sells for that PAN number and see what the difference between the buy and sale is, and see if that's reasonable. Because ostensibly, you can pay just a nominal amount over the cost basis and the rest in cash to justify that nominal increase in price. So I think the government is taking steps like that to combat that. I'm not really sure of what additional steps have been taken, being an external investor, but that is quite a frustrating step that I have to deal with right now. So.
Insightful question. Once again, thank you to our audience. Thank you to Institutional Investor. Thank you, Oliver. Thank you, Adi. Thank you, Sarjeev. Great conversation. I really think we need to come back next year and compare notes. Check the scorecard and see how we did. And obviously, clearly, we all have a hopeful thought that we're going to feel that we've made the right choice by highlighting India when we're talking to our various constituencies. Thank you once again. Thank you, sir.
Thank you.